Welcome into the reaction channel, folks. Got a few things to talk about in this one here today. First thing is we're going to go ahead and react to the Patreon portfolio. We're going to talk about what my next moves are in the Patreon portfolio, what stocks I'm planning on buying, selling, all those sorts of things. Talk about some incredible opportunities I see out there in the stock market. So we'll get into all that at the beginning of this video. $37,000 plus portfolio now at this point in time for the Patreon portfolio, which makes me think, seems like it's not that much money, right? Remember, 7 years ago, the public account, which is now $3.3 million, was around a $37,000 portfolio. So, if we imagine out 7 years from now, don't be surprised if this is $1 million, if not multi-million-dollar portfolio. I know it looks small now, but these babies grow over time with great investments, right? Then I want to go ahead and react to this particular article, which I'm looking really forward to in this video here today. If I could only pick 4 investments to buy and hold forever, I want to go ahead and share my thoughts and opinions on that specific article and, tell you what I think about all those investments, okay? Appreciate y'all being here as always. All I need from you guys, one thing and one thing only. Doing this video on a holiday for you, okay? I need you guys to smash that like button. Take 1 second out of your time right now and just hit the like button on this video. If you want to subscribe to the channel, you can certainly subscribe. We are 77,000 plus subscribers strong, I believe, on the channel. So I appreciate y'all being here on the reaction channel, man. Absolutely phenomenal to see. Okay, now this Patreon portfolio we're about to go through, it now has, I believe, 5 stocks that have over 2x. And this is incredible because I started this portfolio only about 2 years ago. It's about 2 years and 1 month old, and so the amount of success is incredible in this portfolio. And for the pinned comment down there today, I'll actually put my Patreon. So if you want to join my Patreon and see the stocks I'm buying and selling every single week and learn exactly how I build a portfolio and be able to see the moves, right, then you can go ahead, click on the pinned comment and join my Patreon. You also get access to the Patreon Discord chat, okay? Keep in mind that is different than my private stock group, but it's a great starting point for a lot of you guys that are maybe in your first year or two of investing to see exactly what stocks I'm buying and selling each week, how I'm making these moves, okay, and be able to follow along every single week because I post the screenshots. Alrighty, so let's get into this. Here is the Patreon portfolio. So, yeah, obviously incredible amount of success here. We already have a stock that is over 10x'd. That is Palantir. Incredible, right? And once again, this portfolio is barely over 2 years old. And then we have, this is basically a double up, right? 1, 2, 3, 4 other stocks that have already doubled. So basically we have 5 stocks in the Patreon portfolio that have now gone up, 2x or more, which is unbelievable. And we got 2 other stocks that are now knocking on the door. Look at Revolve's gains, right? About 92%, and Amazon's 81% gain. So Amazon and Revolve, don't be surprised if those ones end up, being a double up as well. Okay, so let's start going through these. Let's start right off the top. The biggest position in the Patreon portfolio is Palantir. Let's be very crystal clear about Palantir. It became the biggest position because it went up so ridiculously much. I mean, this is insane, right? 1,100%. Unbelievable. I mean, obviously my public account has even a better cost base. I think what 1,400 or 1,500%, but still, this is insane. So, when it comes to Palantir, and this one I won't spend too much time on because I've spoken about this one a lot on the main channel recently. Obviously the valuation has just gotten incredibly stretched on this one, right? The P ratios, whether you're looking at trailing 12 month, whether you're looking at forward P, very, very stretched. And so it just makes it harder to get future gains in the stock over the next few years, right? Obviously Palantir is just in a major upcycle when it comes to stock price, but when that breaks, it's probably going to be pretty painful for a while in regards to Palantir, but it hasn't broken yet, and so that's the good news in regards to this one. Business model's on fire. They're going to keep putting up great growth rates for years to go in the future, right? But the issue with Palantir is it's going to frustrate some people. It will stagnate for several years. In terms of, and when I say stagnate, it doesn't mean the stock just stops at whatever price and doesn't do anything. No, it'll crash, it'll come back, it'll crash, it'll come back, it'll move all up and down, but essentially you'll look 3-4 years in the future and you won't have made much for gains, if any gains, in this particular stock. So that's the problem with Palantir. The valuations push so much now that the gains are going to be very hard to come by, in future years. And so that is something to kind of keep in mind here. However, if the stock dipped majorly, then that could be a great buying opportunity. Let's say the stock crashes, goes down to, $50, $60, something like that. Well, then we're talking about it's a different situation, especially if Palantir is putting up great growth rates at that time, right? They're still reporting, let's say, 40% revenue growth, things like that. But this is a company that now if they're going to grow revenue in the 30s, it's not enough anymore now at this point in time. They really have to be 40s and more. And we really got to start talking about 50% growth rates in regards to Palantir. So Palantir is just, it's just in a tough spot now. That's the thing I'll say about Palantir. But with that being said, do I want to sell it in the Patreon portfolio? Probably not. I've already taken good profits recently on Palantir in the public account. So do I want to sell it in the Patreon portfolio? Probably not. I'm probably just going to hold strong in the Patreon portfolio, even though the setup's going to be tough the next few years. I gotta be honest about that. It's a really tough setup, but who knows? Palantir just keeps accelerating growth. Maybe all of a sudden they start growing revenue 50, 60%. Like, you never know. And so I'll hold strong for now in regards to those particular shares. I've taken so much for profits in the public account. I'm like, I'm good. Shopify. So Shopify. This is now the second biggest position in the Patreon portfolio, which, by the way, right off the bat, these are banger stocks. When we talk about these sorts of stocks that are my big dog positions, right? Shopify, Palantir, growth beast companies. And the great thing is with Palantir and Shopify, those being the two biggest positions, you look out 5 years or 10 years from now, are those companies still growing? Yeah. It's just a question of how fast are their growth rates going to be in 5 or 10 years. Are we talking 20% growth rates, 10%, 15%, 25%, 30%? That's really the only question in regards to Palantir and Shopify. But there's no doubt, you look at both those companies, they're absolute growth beasts, and those are the sorts of companies you really want to be positioned into, right? And buy when the stocks were very, very cheap. Now, if you look at a chart of Shopify, it's about as good as it gets in regards to the profitability starting to improve immensely. Free cash flow has improved immensely. And obviously the revenue growth is incredibly strong. Now, to push back against Shopify stock, here's the issue in regards to this one. Very high valuation name. It's got a Palantir type problem. Now, it's not nearly as extreme as Palantir, right? Shopify would need to, let's call it at least 2x, if not, 3x to get to the kind of crazy valuation Palantir has on it right now, but it's still a sky-high valuation. Forward P is likely in the 80s right now. Even if they come in better than expected over the next year, let's say the forward P is in the 60s, that's still like 3x where an average company grows at. But remember, Shopify is growing much more rapidly than an average stock. They're growing 3x, 4x, maybe even 5x the growth rates of an average stock. So to put a 3x or 4x multiple, it's actually not crazy. It's a very stable company that just grows and grows and grows. And when's that going to stop? I don't think anytime soon, right? Next one up here is Nike. So Nike I've spoken about a lot on the main channel recently. I think I even did a video on the main channel, last week or so, about stocks I'm buying now. And Nike was one of those. So I've spoken immensely about Nike on the main channel called Financial Education. So if you follow me on that channel, you could get a lot of Nike talk on that one because I've been banging my hand on the table in regards to Nike here recently. I'm banging my Steel membership cards on the table here recently in regards to Nike. Buy the stock and hold and hold and hold and buy and hold and buy and hold. This is an incredible opportunity in regards to Nike that, I think a few years from now we'll look back and be like, geez, man, Nike was such an easy money play, in 2025, and I think that's going to be the situation. So Nike, phenomenal opportunity. Tesla, a little bit of a Palantir-ish problem here. But here's the thing with between Tesla and Palantir, okay? And here's where I'll poke at Tesla more. Tesla offends me. Okay? It's an offensive stock. And it's a stock that obviously I hold in the Patreon portfolio, and I still have several $100,000 in the public account, right? But the issue with Tesla is it trades at this massive multiple, but without the growth. And so we hope there's going to be major growth in the future, but here's the issue. Even when we get to the robotaxi opportunity, the revenue numbers are going to be so small for the first many years of the company because, dude, you need to do such a ridiculous amount of rides. Okay, here's a good way of putting it. Okay, let me pull up charts feature here to really show everybody what's going on here. People have just gotten way too crazy in regards to Tesla. So Tesla's in bad times for their business right now. Bad times, okay? And the company's still doing around $100 billion of revenue. What do you think Uber's doing? Uber is so massive around the world, so many rides. And what is this company doing for revenue? 40-something billion. You know how many years it's going to take for Tesla to ever get enough robotaxi rides where they're at a level that Uber's at? It's not in this decade. You got to look out to the 2030s. In the 2030s, it's possible Tesla could get to the sort of level of amount of rides that Uber has. But this is going to be like a build-out process. It's going to be like 5-10 year process for Tesla to really scale this business. So in this entire decade, you're never going to see big numbers from that business, essentially, right? And even when you do, it's still not going to be nearly as big as people might think, right? Even if you look at Uber projections several years out, they had the company getting to a little less than $60 billion of revenue. So with Tesla being such a big revenue company, the robotaxi opportunity is good opportunity, but it's not nearly as big as people think it is. Not even close to being as big as people think it is. It's a really good opportunity. But the other issue for Tesla that's going to be really be an issue here is they are going to have to face major competition. Uber didn't have to face major competition. Who was Uber's competition when Uber was growing? It was a company named Lyft, joke, and taxis. Easy peasy, lemon squeezy. Who does Tesla have to compete with? Tesla's going to have to compete with Google. Tesla's going to have to compete with Amazon. Tesla's going to have to compete with Uber. We got big competition here, and so that's why I say in regards to Tesla, the valuation's just stretched. The valuation's just stretched in regards to this one. Hopefully we can get back to nice revenue growth, decent revenue growth this year, and margin growth and those sorts of things. But the moral of the story here is in regards to the good old Tesla Tesla is the stock is definitely richly valued, right? Cheesecake next up here. About 47% on this one so far. That does not include dividends. And Cake just very attractively priced, considering they get two great growth concepts that the company's going to be able to grow immensely over the next number of years. Forward P of 14 on this one roughly, and that's they might. I wouldn't be surprised if they come and beat analyst expectations this year as well throughout the year. So the stock trades dirt cheap, and it has great growth prospects. Right. This is one of those things. It's like if Tesla was trading dirt cheap, I would love Tesla stock right now. I'd be buying Tesla hand over fist if Tesla traded at multiples, that were 14 forward P, but it doesn't. It trades at 100 something. That's what makes Tesla not a very good opportunity right now, right? So it's something to kind of keep in mind there. Valuation matters so much in regards to stock market, right? And if you were buying Tesla stock, when I was buying Tesla stock, whether it's when I was buying in the Patreon portfolio or in the public account, which public account's up like 2,000 some %, I was getting great pricing at that time. Investors buying Tesla stock today are not getting great pricing. They're not getting great pricing. PayPal, next position up here, up 24% on this one. In regards to PayPal, also very fair valuation on this one. It's not as undervalued as it was, a few months ago, right? Or I shouldn't say a few months ago, a year ago. It's not as undervalued as it was a year ago, but it's still very fair valuation. Forward P of 15 on this one with, I think mid to high single digit growth for the next few years. Solid, good company. It's one that I think will be hard to lose money on if we look forward like 3-5 years. It's just a question of, does it appreciate another 50% from here, 100%, 150%? That's a real question. Fubo, obviously, they got the deal with Disney hopefully going through this year. If that gets all approved, that's a very nice opportunity there. They're talking about getting cash flow positive. I mean, there's just a lot to be excited about for Fubo for the next several years. Company's kind of a sleeper, still a stock that's very low priced. I mean, Fubo's still in the gulag, are they not? Is Fubo still in the gulag? I believe they are, as of right now, right? Let's see. Yeah, they're still in the gulag. They're $4. As soon as that Disney deal's announced, I wouldn't be surprised if the stock spikes to $8 or $10. Wouldn't be surprised at all. Once that Disney deal goes through, we're off to the races, baby. Because then that takes... I think bankruptcy risk at this point is hard to come by. But once that deal goes through, you throw it out and put it in the trash can. In regards to that whole, could the company ever go BK or something like that, right? Then we're looking good. So the moral of the story is in regards to Fubo, the day that, once that Disney deal's announced, stock's flying. I wouldn't be surprised if people have some inside information on if the deal is going to go through prior to it. So I wouldn't be surprised. So if you see Fubo stock all of a sudden starting to spike day after day after day, week after week after week, don't be surprised if shortly after that you hear an announcement about the deal's gone through. People are in the know. Lawyers talk. All these legal people talk. And word starts to spread. Word starts to get out. And so... if you see a move in Fubo where it goes up day after day, week after week, people know stuff, okay? And so just keep that in mind in regards to good old Fubo. Winning Resorts, up only 4% on Wynn Resorts as of right now. This one's a great opportunity. I spoke about Wynn Resorts pretty extensively, I think, on the main channel, Financial Education. I think I spoke about that extensively on, it was either Thursday or Friday. I think it was on Friday's video. So if you want to hear me talk a lot about Wynn, check out that main channel video from Friday. AMD. Down 7% on the stock right now in the portfolio. And I'm like, thank you very much. Oh my gosh, like I'm just gonna continue to buy AMD. Like you'll probably see me buy AMD every week for the next several months. I'm not kidding. Like you will likely see me buy shares of AMD probably every single week for the next several months. Because here's the thing, I'm down in the position right now, 7%. So I love to, I already thought it was a great deal when it was 7% higher than it is now. So now it's even a better deal, right? But here's the thing, when AMD starts to go up, and once I turn green in this position, and then let's say I'm plus 7%, you think I'm gonna stop buying? Probably not, because it's still gonna be a great deal once I'm plus 7%, right? So AMD needs to appreciate probably 40 to 50% to make me to slow down my buys. So that means that AMD I'm not done buying the stock anytime soon. Like this is still a steal deal buy for me in my personal opinion, right? And when it comes to AMD, the valuation is very, very darn attractive. Forward P in the 20s, come on, man. Like with how much growth AMD has over the next many years, to be trading at a forward P in the 20s right now, come on. Like people don't quite understand everything that's going on with AMD, and I'm thankful for that. I am very thankful for that. SoFi in AMD is another one. I speak about AMD a lot recently, even on the reaction channel here, but definitely on the main channel as well. SoFi is doing its thing now, up 47% on the stock in the portfolio. I wish I had more shares of SoFi. That's the thing with SoFi. I keep wishing I had more shares in the public account and wishing I had more shares in this portfolio as well. SoFi is still a good deal. Like that's the thing. Like SoFi, yes, it's gone up, I know, a lot over the past 6 months. It's still a good deal, I think, for long-term investors. Because remember, a bet on SoFi is a bet that SoFi is going to become a financial giant. Financial giants are $100 billion plus market caps, or several $100 billion market caps. And so if you believe SoFi is going to become a financial giant over the next decade, right? So let's say between 2025 and 2035, you think over this next 10 years, SoFi is going to emerge as a financial giant. Then we're talking about a $100 billion plus market cap on this one. So if they can execute on that, they never go BK in the next big recession or anything like that, and they're able to, Anthony Noto's able to keep the company always in a good capital position, coming out of those recessions, they're able to dominate. Like, you'll see the stock become a financial giant, and you'll see them become a $100 billion plus market cap, and that's going to be a whole lot of fun in regards to that one, because you'll have gotten to see a whole process of like SoFi from like a baby financial institution into like becoming a financial giant, right? And you look at the numbers, you look at the members they're attracting, you look at the most recent quarterly numbers, and you can put the pieces together and you're like, dang, man, like they're on their way to becoming a financial giant. Like, they still got a lot of work to do, but the groundwork is all laid at this point in time, right? If we're building a house, I would say SoFi's already got the foundation of the house done, right? And I would say they've even got the walls all up, right? They even got the roof on. Like now, SoFi just needs to get the interior of the house finished, and I think we're looking really good in regards to SoFi. Amazing's on. This is a position we're up about 81% on. There's another one. I wish I built it out more aggressively back in 2023. I was a little too slow with my buys. But the thing was, when I started this portfolio, man, a lot of those big techs were still really, really cheap. And so I was trying to buy Meta, I was trying to buy Amazon, I was trying to buy Tesla. It was just, there was a lot of opportunities at that particular time. Revolve, and by the way, in regards to Amazon's valuation on this baby, we can go ahead and take a peek at that. So Amazon trading around a 35 forward P, very fair. And remember, Amazon comes in and beats numbers quite often. Very fair valuation for Amazon. This is a company that you can count on just growing and growing and growing. They put expectations very low going into this year too. Like if you look at their latest guidance, they're talking about 5 to 9% revenue growth. I can't imagine Amazon growing less than 10%. I can't imagine Amazon growing less than 10% a year, any year in this entire decade, all the way out to 2030. Maybe 2030 through 2040, maybe we start talking about growth rates a little slower. Maybe we talk about, revenue growth of, 5 to 9% then, but it's just really hard for me to wrap my head around anything less than 10% revenue growth. And because they have three main growth businesses, e-commerce is growth, Amazon Web Services is growth, and their advertising business is growth. So for me to imagine them not growing at least 10%, no. This company set expectations on the floor. Management set expectations so low that this stock is primed to hit 300 plus this year. Like if Amazon if we're at this time next year and Amazon's, $310 or $320, I wouldn't be surprised at all. Because of how low management set expectations, then now they should come in and beat numbers throughout the year, and everybody's gonna flip their flapjacks over this one. But just phenomenal growth, obviously, in regards to this company, year after year after year. And obviously the margin story's gotten a lot better over the last couple of years here, from negative net margins to now we're talking about net margins of around getting close to 11%. That's got a long way to play out. Net margins for this company long term, I think they're probably more in the 15 to 20% range. AWS, great profitable business. Advertising, we know that's straight profit. That's, Amazon's name of the game. But the e-commerce side of the business, I think they're going to be able to focus so much more on profitability, in my opinion, over this next decade in regards to e-com. Bezos and the team really just wanted to focus on making sure they won the opportunity, because that's a multi-trillion-dollar opportunity itself. Like e-commerce alone, we're not talking about AWS, which is arguably just as big of an opportunity, if not bigger, for the company. But e-commerce is a multi-trillion-dollar opportunity, right? Like, that's so big. And so I think Bezos and the team has always focused that business on, let's just make sure we're number one by a mile. And they have. And they won. The game's over now. So Amazon won the next 10 to 20 years in regards to e-commerce. So now the name of the game, in my opinion, is really focusing on profitability over this next 10 to 20 years. That's my opinion on that, right? So these net margins, this is still very early days. When you see Amazon at a 10% net margin, just understand we're likely going to 15 to 20% long term, which, we're talking about a company that is eventually going to be doing $1 trillion of revenue. So when we're talking about $1 trillion of revenue, and we're talking about a 20% net margin that they'll probably be at long term, in my opinion, we're talking about a company that is going to have net income of $200 billion a year. That's crazy. And they'll still be growing likely. So $200 billion in net income, if you put a 30 PE ratio on that, right? Which if they're still a strong growing company at that time, like they're going to command a 30 PE, no problem, right? Plus they'll be seen as like just a kind of an Apple-like company and just their dominance. 30 PE on $200 billion in net income, you're at a $6 billion market cap. Now factor in the incredible amount of share buybacks they'll likely do over this next 10, 15 years. And what do you think EPS is going to be? Like, oh my gosh, earnings per share is going to be ridiculous. And so Amazon, it continues to be a core holding in the public account. I wish I held a lot more shares. I wish I held so many more shares in the public account, honestly. But that one's just, they won. They won the next 10 to 20 years between their advertising business, between AWS, and between their e-commerce side. They won the next 10 to 20 years. We have Revolve as a decent sized position in the portfolio, $1,500 there with Revolve. Revolve is kind of, I don't talk about this one a lot. E-commerce company, really focused on clothing, big with the females. Incredible co-CEOs of this company. They run the ship very good. They just do a hell of a job, man. There's just a really good management team at this company. So I like to hold that one. It's just a good company. They usually surprise the upside. Meta, there's a reason Meta is the biggest position in the public account, right? With that being said, it's gone up so much, I can't ever afford to buy Meta shares. Because here's the thing, I only deposit $250 a week into the portfolio, right? And Meta shares are like 700 plus now. It's gone up so much. So unfortunately, I can't, even if I wanted to buy Meta, I can't buy Meta. I could look into maybe doing fractional shares or something like that, but a little frustrating in regards to that. So, and Meta's still a buy. Like, it's the craziest thing, man. Meta's still a buy. Like, when you factor in the growth rates this company has, and when you factor in, Meta's still a company that's going to be growing 15, 20% for a long time to go in the future, right? And we're trading at a forward P in the 20s. So people make a big deal about, oh, Meta's gone up like 20-something days in a row. It's like, why shouldn't it? Why shouldn't people still be buying Meta? Give me one reason. You don't have one. A company grows revenue 15, 20% in future years. It'll probably grow earnings per share. I wouldn't be surprised even faster than that, right? And then they're investing all this into AI, into the metaverse, all these other great long-term growth opportunities. Like, Meta's a double-digit grower for, who knows, maybe 10, 20 years to go in the future. And so you know, at a forward P at 28, you're still getting good pricing on the stock. Like, is it what it was when it was $100? No. But even at 700, you're still not getting bad pricing. If Meta was trading at 100 forward PE right now, I'd say, nah, not that good of an opportunity. If it was trading at 50 forward PE right now, I'd be like, not that good of an opportunity right now. At a 20-something forward PE, come on, it's still a deal. And so sometimes I'm tempted to sell those shares in this portfolio, but then I look at the valuation, I'm like, it's so hard for me to sell Meta. It's so hard. Elf on a shelf. Next one, this is a fairly new position, already up almost 10% on it. Kind of upset about that. I'm hoping this one weakens. But the problem is, I think so many people see Elf down and out the way the stock price is right now, and they understand the growth rates this company has. It's been it's arguably the most well-run company of the past 5 years in the stock market. The only one the only company you put in the same sentence as Elf is Nvidia, and that's it. They're the most well-run company of the past 5 years in the stock market, other than maybe Nvidia, right? But this one, I mean, the valuation's gotten so compelling on this company now, and Elf's growth rates are just beautiful. It's just beautiful, right? Now, analysts have this whole slowing of growth and then kind of a troughing and coming back up. We'll see. Like, Elf's got so much international opportunity over this next several years. It's ridiculous, right? And they're still growing a lot in the United States. And then when you're looking at operating income, when you're looking at operating cash flow, when you're looking at free cash flow, I think you're going to see a massive bounce back in all those metrics over this next 1 to 2 years. And as all those metrics bounce back strong over this next 1 to 2 years, what do you think is going to happen to the stock price? So the moral of the story is I would love to buy some more Elf shares as well, right? Okay, so now let's get into this gentleman's opinion on top 4 investments to buy and hold forever. And once again, if you want to join my Patreon, I'll put that as pinned comment down there today. It's also always linked in the description area. And that's the ability to see the stocks I'm buying and selling each and every week in there, okay? Alrighty, and also I get a Discord chat access as well. Now, in the higher end tier, by the way, comes with my Become Master Stock Market course, my #1 stock market course ever. Alrighty, so what do I think about this gentleman's top 4 investments? So first one is basically just kind of like an index fund on the S&P 500. He's talking about SPY, he's talking about VU. I think those are fine, right? Here's my opinion on like the S&P 500 index funds. It's bare minimum activity. It's like if somebody said, hey, I want to go I want bare minimum of what I got to do each week. Somebody would probably tell them, go walk on the treadmill for 30 minutes 3 times a week, right? Bare minimum, like, at least do that. That's kind of how I feel about S&P 500 index funds. Like, bare minimum, if somebody doesn't want to put in the work and they don't want to actually go run and they actually don't want to lift weights and, do Pilates class and do yoga class and all that stuff, okay. At least go walk on the treadmill a few times. That's the same way I feel about index funds. Like if somebody doesn't want to individually stock pick and they don't want to, actually do the research work on these companies and they don't want to use 1000X, they don't want to say, you know what, let me do some research on this company I heard. This company Nvidia I looked into. Let me see what's going on with them, right? And they type in Nvidia's ticker symbol and they see what's going on with the growth rates of this company, right? And they see, okay, the gross margins are going here, the net margins are going here. Okay, here's where the EPS is going. Here's where it's projected to go, right? Okay, here's a free cash flow, okay. And they're doing all this research work, and then they're like, oh, let me listen to the latest conference call of NVIDIA. So they type in NVIDIA's ticker symbol. Not everybody wants to do this, right? And they're like, okay, boom, let me hit the play button. Okay, let me listen to what they got to say. Ooh, I like this. Ooh, Jensen just said this. Oh, no, right? Okay. Some people don't want to do that, and that's fine. Like, you don't want to do that, and you don't want to run your projections. You don't want to say, okay, let me type in NVIDIA's ticker symbol here. Now I've done my research on it. Let me, I think they could grow 30%, blah, 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 and they put in all their valuations, right? And they say, okay, a P ratio, I think 25 to 35 is fair, right? And they run their base case, and not everybody wants to do that. And so for the people that don't want to do that, right, there's index funds for you. Just like not everybody wants to actually work hard at the gym, right? So this is not meant for everybody. What I do is not meant for everybody, right? If it was meant for everybody, everybody would have a big house, wouldn't they? Everybody would have a Ferrari and a Lamborghini, wouldn't they? Right? Like just think about it. Like if this was for everybody, everybody would have this stuff. Everybody would be going on baller vacations, right? Like everybody would be traveling the world. Everybody would have the best healthcare, but they don't. And so if you're looking for bare minimum, S&P 500 index funds, always right there. That's your walking on a treadmill for 30 minutes a week or whatever, right? Next one up here, investment number 2, he talks about many investors, the SCHD, kind of a dividend equity ETF. He's talking about here. He also talks about Brookfield Asset Management. Those are okay, but I would just much rather pick, like if I'm trying, you guys know my strategy, GVD, growth value dividends. If I'm trying to do like, if I want to say like, I need to buy 5 dividend stocks. Let's say I have a portfolio of 15 stocks, right? And I have 5 growth stocks and 5 more just values that aren't paying a dividend. And I'm saying I need 5 dividend payers as well. I'd rather just pick the top tier, best companies I can find that have great growth rates for the next several years, likely expected, pay great dividends, have a lower payout ratio that are going to have tons of room to expand that dividend over the next 5, 10 years. I would much rather just invest in those top 5 companies than worry about trying to spread my money amongst, because you got to understand there's so many bad dividend stocks out there. So when you just throw your money at like, you know, SCHD or any of these other ones that are just kind of like investing around, just throwing money at dividend stock, you're going to be in so many crap quality ones. Why not pick 5 top tier ones? Or if you want to build a portfolio of 10 dividend stock, why not pick 10 great dividend companies that have immense room to up their dividends in future years, right? And are likely going to get you great capital appreciation along with dividends. Why not do that? Why do I need to hold 100 different dividend stocks or 200 or 300 or 400 or 500? I don't want to hold 500 dividend stocks. I'm sorry. Like there's just going to be too many bad quality in there, right? Much rather do my own research and find my top tier dividend stocks. Investment number 3. Okay, there are many options for this one. One could be diversified bond, like the Vanguard Total Bond Fund Index, but its 3.67% yield is relatively low. High yield bonds are crap, man. Bonds are so crap. Like, look at this. Look at the bond, index versus, let's say, the public count over the past year. And then you pull up a lot of these bond-related indexes over the past 5 years. Oh my gosh, like over the past 5 years, some of these bond indexes are negative, folks. Negative. So, nah. I'm good. Thank you very much. No. Next one, talking about gold, basically. Gold is an investment, GLD. Not bad. Gold's something people could hold as a small portfolio allocation, right? Also, kind of some of the younger folks might just want to hold Bitcoin. You could always do a strategy. Let's say you want to allocate 10% to non-stocks. You could always do something like just put 5% of your money in Bitcoin, put 5% in gold, something like that. I like silver more than gold, but with that being said, that one's okay. It's not my favorite, certainly, but it's okay. It's okay, folks, okay? Appreciate y'all joining me as always. Thank you so much for being here. Once again, pin comment down there if you're looking to access my Patreon. I'll put that as pin comment, and you can pin comment. It's also in the description area. If you want to join. If not, it's all good. Much love and have a great day.